Hello, I'm Hickey from interest.co.nz, here with a special report from the Reserve Bank in Wellington, brought to you in association with ASB. Today, the Reserve Bank stopped cutting interest rates. Having gone from 8.25% in July last year, it stopped today at 2.5%. It held the official cash rate at 2.5%. Most economists had expected this, although there had been a few, including myself, that saw the interest rates falling another 0.25% to 2.25%. But the Reserve Bank is saying it's seeing some signs of recovery in the global economy and in the New Zealand economy. It points in particular to the housing sector, where house prices and volumes have picked up from March through to May. However, the Reserve Bank says this pickup in house prices is unsustainable. We have too much debt, house prices are still overvalued, and unemployment will continue to rise. The Reserve Bank says that the economic recovery, which should start to kick in from the end of this year, is going to be slow and fragile, and it retains the right to continue cutting the official cash rate. It says it may cut it again modestly sometime later this year or next year. It has repeated its reassurance that it will keep the official cash rate at 2.5% or lower through until the second half of 2010. The Reserve Bank again has called on the banks to cut their short-term borrowing rates even further. However, none of the banks have responded yet, and remember, they didn't cut their floating rates after the last official cash rate cut on April the 30th. The Reserve Bank too has ruled out again any form of quantitative easing, that's bond buying or money printing, and Alan Bollard has been careful not to say he would force the banks to cut their interest rates. He said he didn't want to get back into the bad old days of the Muldoon era where governments set prices. I'm Hickey. That was a special report brought to you in association with ASB from here at the Reserve Bank in Wellington.